If you have seen the term interval fund in a prospectus, you might be wondering what makes these investments different from standard mutual funds. The term interval refers to the specific windows of time when an investor is allowed to cash out their shares. While common stocks or mutual funds allow you to sell daily, interval funds are designed as long-term vehicles with limited liquidity. These funds hold assets that are hard to sell quickly, like commercial real estate, so they match that structure with limited investor exit windows. You are trading the convenience of daily cash access for the potential to gain exposure to different types of private market assets. This chart shows the potential wait time for liquidity. Always check the fund prospectus to know exactly when your next exit window opens. Remember that these funds are not meant for emergency savings. They require a long-term mindset because your capital will be locked for months. Thanks for watching. Understanding the rules of your investment is the best way to stay in control. See you in the next video.